Hey there, it's Will again. Sorry I haven't done a video for a while, but I'm going to hopefully try to get back into this more regularly. But what I do is I look at the markets and I look at sectors, and then you can drill down into stocks. I look at the strongest sectors and stuff like that. So I'm using TC2000. They recently released a new version, so there's some changes like with this filter here, and maybe I'll do a video or two on that if you guys want to. But I've added columns, like custom columns. So I've got year to date, 90 day, 30 day, 5 day. So I can see what's been doing well within each of these tabs here. So there's a lot of information in TC2000 in a short space, which is really nice. I use volatility stops here. You've got these green dots, which is basically the average true range. There's a factor like up here. You'll see V stop 20 and then 1.6. So that's the factor 1.6. You can adjust that. If you put a bigger number, it's going to be give you more berth between ups and downs. But if we look at what I usually do is look at the markets and then go from there. So if you want to get a free trial of TC2000 or $25 off your subscription, check out the link in the description below, in the video description. I've got the gold plan and I use real-time data, US real-time data as well. So there's no delay. So you probably know that the markets have been pretty volatile lately with the Fed and all the debt ceiling in the States and inflation and all that. So it's not been a great time. It's been a tricky time. That's partly why I haven't done as many videos. But the tech stocks have done well. And the question right now is whether it's too extended. And so what I do, like I talk about when you should get in ideally, and that's usually after a pullback and then a break of a downtrend. So with, ideally you'd have higher lows established. So you can see I drew a line down here, and when it broke that, you want to see if you've got new higher lows established. And this is, there's a question sometimes what the higher low is, but if you see this pullback, that's definitely a higher low right here. So what I'll do is when you see this pulling back with these red volatility stops, I'll draw a line across the tops, and then you wait for a breakout. And when you see this breakout right here, it'd be a good entry point, and then your stop would be down here as one option. That's the actual price low that you had. Volatility stops, they take into account volatility, but they're not quite as wide usually of a range. So you could do it more, closer to the stock price by using the green dots as your stop. And then you notice that after this breakout, you already had a low over here. You also got up above the 50-day moving average. So you see this blue line, and now you have the 34 EMA and the 8 EMA, kind of above, and then now you've broken the 50 and all those ones are above. So when you have sort of an alignment of multiple moving averages from small to long, short to long, like 250, 34, 8, and then this is 3, if you want to use that. That's an alignment of the, which is usually a strong uptrend. But right now we're getting this gap up, and it's, quite high up off the 8 EMA. So, if you want to take profits, if you're down here, that'd be great. Or you could just wait and see, wait for a red volatility stop. I mean, this one got to be a red volatility stop, but it was only a short-term pullback. So, you could use the 34 EMA if you wanted to. It doesn't always work out. Sometimes it pulls back to the 50 or the 200, but it's getting, fairly extended here. But if you're in the trade, you can stay in and wait. Just if you're doing daily trades, use the volatility stop and wait for it to turn red. That's one option. You could look at recent lows, as long as it doesn't break this. There's a low here, there's a low there. Then you get that pullback there. As it moves up, you could put your stop near a recent low, which is kind of a support point. So there's different ways, that you could do it. So the NASDAQ looks really good. And of course, on each of these tables that I have, I've got a custom series of columns. So I've got year to date, as I mentioned. So you can see that the year to date here is 31%, and it blows away everything else. You've got this S&P 500 at 9.85. And then for the 90 day, you got 21 versus 7 and 3. So, and the Dow has done pretty badly here. So the tech was the place to be, but like I said, right now I think it's, it is extended. So if you're not in it right now, it's probably a bit tricky to be jumping in. But that gives you kind of a framework once you look at the indices. If you look at the volatility index VIX, it just keeps going down. So you're in this downtrend. At some point it will reverse. You get these little spikes, but that's showing you that the markets are usually doing better when the volatility goes down. The other thing I have on this chart is the interest rates. This is the inverse, so that you see if interest rates are going up. This is SJB, which are shorter term, and the UUP is important because that's the U.S. dollar. So when you see this U.S. dollar getting stronger, that's when you start worrying if the markets are going to go down because the dollar is strong. But you see how it bounced off the 200 at this point, and now it did it again. Like it's right at that point where it could break up through or it could bounce back down. And the chances are, based on the previous, so a lot of times I'll draw a horizontal line across the point, which is and you'd want to see it breaking up above there and maybe even pulling back to test it. So this is a little bit of a worrisome issue when the dollar starts getting stronger, because that can be bad for the markets. Also, there's some news that there's a chance of a hike, interest rate hike in June and beyond. So they used to think there was going to be a freeze of interest rates and then lowering at some point. And so the markets did really well since January, but now they're talking about rates. So because we've been focused on debt ceiling and other things, Jerome Powell and all that, I think there was a bit of a recent lag or forgetfulness about the fact that the rates could go up again. So I think that could be the next negative thing that happens. So like I mentioned briefly, Dow Jones has been in a pretty much flat trading range. I mean, you could draw lines like this if you wanted to. You could potentially get in when it breaks through a pullback, but you've got this line where it's kind of bouncing off, and now it's below the 50-day and stuck between the 200 and the 50-day. So not looking great. But if you break through, this pullback and start to head up, then you could get in. But below the charts, I've got price percent oscillator, which is like MACD. So usually, like a lot of times when you get a crossover, it's a good momentum indicator, like here. And when it crosses down, it's the opposite. It doesn't always work. The ones that are strong a lot of times are way below the line or way above. They definitely get extended. And then I've got stochastics, which is oversold, overbought. I don't use it that much because it can stay overbought or oversold for quite some time. But another thing that I've got is ADX. That's just to show if there's a trend or not. It's not the best, it's not great, always perfect indicator, but if you're above this line 20 here, you tend to be in a trend. Like here you see it's in a downtrend, you're above. When you get below, it's kind of flat. So it's not a perfect scenario. You can see it starts to peak up above 20, like you're starting to head this nice downtrend, but it doesn't last, and there's another little one where it's starting to go in an uptrend. So this will be above 20, whether it's in an uptrend or a downtrend, just to show you if it's trending. But so I don't put too much weight into these, but mostly price action, oriented. But so that's kind of like where I start with the markets. And then what I do, I usually often go to the U.S. sectors. So I created this myself. It's a watch list of U.S. sectors. If you sort it by year to date, obviously, or not obviously, but Ethereum and Bitcoin are the best in terms of the gains for quite some time. It's not been true within the last month, but since January. So if we look at Ethereum, like back in January, you can see how much it's gone up. And if we break through this downtrend, this little pullback here, it could be a big, jump in the Ethereum, but it is below the 50 and it could bounce up and head down as well. So same with Bitcoin. It's in this state where, it's generally in a downtrend. It's not great. And we'll have to see if it can break through this downtrend here. But other than that, if you're not into those ones, because like I said, recently they've been in a pullback. So I like to look at the different columns because sometimes year to date is important for like persistent or consistent gains and strength. And then, but short term, you have this big, negative pullback. The other ones that are really good with the tech, because I showed you the NASDAQ was doing really well, but specifically is the FANG stocks, which is like Amazon, Apple, Facebook, Meta, Google. So, basically Netflix, if you want to consider, and the FANG FNGS has other things in it like NVIDIA and stuff. And then you've got, so this one has 62%, so it's pretty close. And it's actually been better on a 30-day, compared to Bitcoin. And you can see here, it's just gone crazy. So if you determine that NASDAQ is doing really well, you might want to go with a stronger ETF that, kind of parallels the NASDAQ, but goes up a lot more. And so that would be FANGs, or you could have semiconductors. So when I see this vertical stuff, I don't really want to jump in when it's doing kind of crazy vertical jumps because of NVIDIA, but that's, based on these charts. METV is similar to FANG, to FANG, yeah, that's right, Metaverse. You can click on this with this TC2000 and see all the stocks within an ETF. So that's why I was saying when you look at the ETFs, if you don't want to buy the ETF, you can look at do the same process and drill down to individual stocks. So I could do year to date, and you can see NVIDIA is up 175%. So you're going to get a lot more gains in the stocks, or losses, depending on which way it goes. But AMD is similar. Meta, it's been a really nice looking chart. But Amazon, Google, Roblox, stuff like that is in here, so you can look at it. But so that's kind of a nice feature. If you want to get TC2000, again, I mentioned, check out a free trial in the description of the video below, or get $25 off your subscription. I've been using this for years. I really like it. Other ones you could consider are bots. It's like an AI type thing. But what I do is I look at the year-to-date or 30-day or whatever gains, and sometimes, you can just focus on the better ones and not try to drill. Because like once you get to NASDAQ at 31, compare that to bots 34, it's not a huge difference. 21 for the 90-day performance versus 19. So similar results. You can just get the NASDAQ if you wanted to, but XLK is similar as well, technology. So right now when it starts going vertical with gaps, I get a little nervous, but so that's just how I see it. I've got other columns here I've talked about before, but you can look for like a MACD crossover, and that's where you have the formulas. So if you click on this column, and you can start to see that I said when the price percent is crossing up the 9 moving average, the 9-day moving average, exponential. So within the last 3 bars, so I've got formulas in here, so I can look for things that have crossed over. I can look for another column, another tab I have is above the T line, which is the ADMA, and the price percent oscillator. So that means that you're above the price. I don't want it like where it's crossed down below the MACD. So I want this to be above, and I want it to be above the ADMA. So this gives me a filter. So you've got cloud stocks as well. They're doing pretty good, but you can see how it broke out. So when you have this pullback like this, look for a break and see if it's got higher lows here, which it does. So that would be a good entry point right there. And you're above you've crossed up above, and you're above, ADMA. That's kind of what this chart does. And then I've got the similar one for Canadian stocks. So tech is like FANG. It's crossed over and it's above the ADMA. Cyber is cybersecurity. So the tech is obviously really good. You could focus on those. There's one that wasn't tech related, which is Kane. But right now you can see it cross down the MACD and it's heading down. So what you could do is draw a line like this, wait for a breakout, green volatility stop, and this thing to curve around. It's just starting to maybe, but it's up quite high when you see it get way up above the 50 and the 8. Like when you see it pull away like this and kind of go vertical here, it's consolidating and you can have another leg up again. But these just with these columns that I created, it gives you a chance to see kind of ones that are within a few months are doing really well, and the strongest relative strength stocks. Because if you sort by, like, say, percent change, that's what I usually have up here, and you look at Turkey, it doesn't really tell you, well, year to date's -15, -16, so it's not great, but just that one day, today or whatever. So looking at the daily gains for that particular day is not necessarily the way to go. So ARK is an interesting one because it's been beaten down pretty bad. If we pull back, you can see how much it's been pulling down. So it's in this pretty much consolidation, but now you're pulling up above the 50, and the 50 is getting close to crossing the 200. They're all right in line, and it's just above that. So we're at a point where this could start to go. It's going to depend on which way things go with the interest rates and if the markets are going to continue to do well. But ARK's been beaten down quite a long time. If you click on that component watch list, you get to see the stocks within that range. So if I go year to date, you'll see Palantir has done really well. It's just gone vertical though, but Coinbase, Shopify, Tesla. Tesla's starting to, it hit up against the 200 a couple of times, but it's just almost going to break through that. CRISPR. So anyway, that's a way you can look at stocks individually within the ETFs. So you can kind of drill down from the overall market to the indices, start to focus on tech, let's say, and then within the tech, figure out which areas are the strongest, and focus on those. I think that's all I'm going to say for today. I hope I can do more videos more consistently. And let me know what you think in the comments, and please check out TC2000. It's a great program, and you can get that in the description below the video. I'll see you guys in the next video.